This is Frontier Opening Bell, and I'm Temple Ashaju. Thank you for joining us on this edition of the program. With us on the show today, we've got Ali Segar of the professional services firm based in Dubai, Segar and Associates. Thank you for joining us on the show, Ali. I appreciate your presence on the show as well. Akintunde Suleiman, research analyst with Greenwich Merchant Bank, based in Nigeria. Thank you, gentlemen, for coming on the show this morning. Quickly, let's kick in with the indexes, beginning with Nigeria, which was down yesterday massively by 1.96%. Now we have the psychological position of that index now currently standing at 40,696.01. That's what the index looks like right now. The BRVM Stock Exchange was down 0.86% on Wednesday. Egypt Stock Exchange was positive by some 0.85%. Kenya, representing the Nairobi Stock Exchange, there slipped by 0.05% on Wednesday, while the Johannesburg Stock Exchange in South Africa was positive, actually leaped by 1.52%. Now, moving on to the Eastern African headlines that we have. Kenya's electricity generating company paid some 1.15 billion Kenyan shillings government as 2019 dividend. Daniel Kiprono is now Portland Cement's new managing director, and Kenya's mobile money transaction tops some 5.2 trillion Kenyan shillings in 2020. Merge Exchange reports a corporate story there that Minervest Limited, which is a tradable company on that exchange, has agreed to buy 100% stake of Soviet Vest for $11.5 million. Now, hedge funds, two hedge funds that have some dealings with the Mozambique government, is filing a suit against Credit Suisse and, of course, Mozambique government over a $2 billion debt scandal. Now, that we understand relates to the contract that these two key hedge funds have some $30 million investment in, and these are VR Capital and Farallon Capital Partners, both companies coming together to sue these two entities for this particular deal that's kind of failed at the end of the day. Now, the suit is actually being filed in London, and folks are waiting for outcome of this suit eventually. Moving to the Western African markets, we look at Nigeria, where the Senate confirms Bello Hassan as new NDIC MD and CEO. NDIC is the Nigeria Deposit Insurance Corporation. And of course, Iroko TV is planning to list on the London Stock Exchange to raise some $20 million to $30 billion. That is the alternative investment market of the London Stock Exchange. That seems to be the wing of that this exchange that they're targeting. In Ghana, Asante Gold Corporation seeks to list $3 million to list on the Ghana Stock Exchange and raise some $3 million in capital. Now, Tullow Oil is to sell its stake in Equatorial Guinea, Gabon oil fields, all together for $180 million, while Societe Generale reports a net loss of 169.2 billion CFA for the year 2020. Akintunde, let me come to you quickly with the headlines that we have across across Western part of Africa. I mean, I know you are aware of what is going on back home regarding the NDIC. That's the Deposit Insurance Corporation there. Anything to say about the development and the confirmation of the new CEO?
I mean, we are expecting that this is a positive light, and we are expecting that this will bring some stability to that corporation. The ruffles they've been having recently has not been all that solid. As well, the Senate confirmed Ahmed Kur as well yesterday as the MD of AMCON. So this will be a second term, and hopefully that as well brings some stability to the banking system generally, because the AMCON's balance sheet is still heavy, and they need to tie that down, or they need to offset a lot of those assets that have come about from bad loans that have been taken by the banks. What strikes me here usually is the Iroko TV listing. Just like Jumia and like InterSwitch we were expecting, they all seem to be going out of the Nigerian capital market. I think this should be a concern for the Nigerian Stock Exchange. They floated the growth board to capture this sort of firms, but it seems the firms are more judged regarding antecedent or precedent transactions. According to the CEO of Iroko TV, he stated that due to the lack of precedent transactions in terms of or listing of startup tech firms of baby tech firms, that has sort of discouraged them from listing in the Nigerian Stock Exchange for now, but rather they will tap into the alternative investment market of the London Stock Exchange. And because their valuation is about 80 to $100 million. That's why you're seeing them going to the alternative investment markets. The main board cannot they can't feature in there because of the huge regulatory capitalization of that firm. But holistically, it's a good thing for Iroko TV. About 80% of their revenue comes from outside Africa. So this as well, it's more or less like them encouraging their subscribers outside Africa that, oh, we're here for you. They intended on increasing their price late last year or earlier last year, the average revenue per user. But we all know what happened last year, which thwarted a lot of plans for companies and all that. And you see that lately they've been going on that they've been having some sort of turnover in terms of letting staff go or taking them on unpaid leave and all that. So this would be a good buffer for them. And this can as well help them in spurring up their revenue and returning value to shareholders. It's going to be an IPO, and hopefully this as well, there'll be some dual listing at some point. We'll be looking forward to them, returning to Africa, to Nigeria specifically, to have some sort of dual listing to further deepen the capital market in Nigeria and spur assets for diversification for portfolio managers.
Yeah, but this sort of bring up some kind of a serious challenge for the African stock exchanges that don't seem to be really ready for the tech companies, as you mentioned earlier, and as you alluded to what the CEO of Iroko TV actually said. But I mean, how significant is this trend at this point for the AFCFTA, which is a major initiative that we are trying to drive to integrate Africa?
Yeah, at the moment, it just seems it's more of regulatory and infrastructure issues. They just need we just need someone to build the cat, really, and we just need one of these firms to actually put their whole trust in the exchanges that we have in Africa. I'm going to be specific about Nigeria. You see, the NSE floated the growth board, and we've been seeing some sort of traction around there. The NSE just needs to show to these companies, just need to show some confidence to these companies, give them some ameliorate their fears in order so they can come on listing on that growth board. The good thing is that this the mutualization of the Nigerian Stock Exchange as well will propel such listing, and we expect that while the mutualization kicks off, we'll be expecting most of these companies to start engaging, the exchange more, because the exchange will move away from a company guaranteed by to a company guaranteed by shares, a public company, which means that they amongst their goals will be to drive profit, and for you to drive profit, you have to give excellence and all that. So we're expecting that an improved corporate governance and an enhanced branding and outreach reach to clients, and would spur up more listings. And with the government looking at listing some of its GEOs and government-owned enterprises, we're expecting this as well to buffer up positive sentiments to the Nigerian Stock Exchange. And probably going into 2022, 2023, we'll be seeing more of these startup tech firms list on the Nigerian Stock Exchange Gold Board.
All right, then thank you very much, Akintunde Suleiman. Let's now move on to the Southern African market and touch on the story that concerns us all, which is the COVID-19 vaccine. I mean, the South African government has expressed readiness to commence inoculation with the Johnson & Johnson vaccines, having realized that the AstraZeneca vaccine is not something that is actually effective for the treatment of the South African variants. We also know that Standard Bank eyes a stake in increase in Angolan units. Russia's Alrosa is to donate some Sputnik virus vaccines to Angola and Zimbabwe, while the Botswana Stock Exchange, Lucara Diamond full year 2020 results is to be released before the end of this month, specifically February the 22nd. Ali, let me get your thoughts on what the South African government is now doing around the vaccine, having realized that AstraZeneca is not suitable for the South African variant of COVID-19. Now they seem to have received some 12 million doses of the Johnson & Johnson, 20 million doses of the Pfizer and BioNTech vaccine. I mean, how significant is this development for business confidence in such a country?
Yes, to be honest, it's kind of a waste, you know, because all this vaccine going to, we can say, to trash is not a good news, even for, we can say, to build the trust in South Africa, you know, because you had a lot of choices to make. So you have the Pfizer vaccine, you have the Sputnik one, you have the Chinese one, and all this. And it seems that they took the wrong one. So it's really bad for the trust, even into the government. You know, they have not chosen the right one. So it doesn't make, we can say, the business atmosphere really safe. Because what we can say is, yes, we have a Southern African variant, but perhaps there will be in the future other variants. So are the new vaccine really efficient to face these new variants? So it's kind of a waste, and it doesn't, we can say, it doesn't make the thing comfortable for the business atmosphere, in fact.
Right, thank you for that comment. Akintunde, have you got any comments to add to this? I mean, what does it mean for business confidence from your perspective?
Yeah, I mean, it's a sad note to hear that the vaccines were not effective for their variants. It will pull down confidence, and it as well pulls down growth prospect, and all the forecasts is thrown into the bin, because most of the forecasts have taken into consideration that there will be some sort of ease in the spread, and as well cases due to the development of the vaccines. But now knowing that the South African variant is not going, the vaccines will not be as effective to the South African variant. It pulls down the SSA forecast generally in Africa, because we've been expecting that there will be some sort of upward movement in growth this year. But with this, South Africa being an heavyweight, it only means that it's going to drag the rest of the whole region and the rest of the countries. But hopefully, going down the year, we'll be expecting that there'll be more light and more development into the vaccines, and this would tie down the spread we're seeing in South Africa. Because no matter what, we just need to see them post up from that lows that they're currently staying, they are currently have. And you recollect some weeks back we were saying lockdowns cannot be the solution, and cannot be the strategic tool to getting out of this pandemic. There need to be some strategic decisions taken holistically to ensure that the South African economy bounces back.
All right, and thank you so much for that contribution. Looking at the Northern African space now, where Egypt is to launch a new tender for oil and gas bid round for before the end of February this month. We also know that Egypt's annual inflation slows to 4.3% in January, from 5.4% in December. EBRD also injected some 1 million euros into Egypt's dry ports and logistics center, and Total Maroc expects to net some social results in 2020 down to 33%, while ports operator Marsa Maroc reports some 5% decline in 2020 turnover. Ali Segar, I'm coming to you with these headlines in the northern part of Africa. I mean, let's begin with the inflation that has now nosedived by some 4.3% compared to 5.4% in December.
Yes, so it's very good news, you know, to have this inflation rate, we can say, decreasing for the second month in total. The rate is quite high, but it's not that high. So it's a really good news for we can say for the Egyptian economy. You know, it has given some leeway for even for the central bank, we can say, to maintain its rate, and so it's overnight lending deposit and all this rate to keep it unchanged. So it's really good news for Egypt. Just to let you know, this inflation has been slowed down for the second month. So it's really good for Egypt. So this is a good news, in fact.
Great. Looking at okay, let me get Akintunde's comments on that. I mean, Egypt has done a whole lot of reforms, economic reforms on the monetary side of things, and of course the fiscal end too. I mean, what are the lessons for Nigeria to learn from Egypt in this regard, looking at how the inflation has actually been deepening in recent times?
To be very candid, comparing the Nigerian economy to the Egyptian economy is going to be taking it a little bit far, because you look at the drivers of Nigerian, the inflation in the Nigerian economy is highly structural. I do not think the monetary leeways by reducing MPR or increasing CRR would stem down the inflation we are seeing, because if you look deeply into the drivers of the Nigerian inflation in Nigeria, you will say that is highly exchange rate and prices of PMS and pump price. And if those two remain threatened and highly volatile, we'll keep seeing this spike in inflation we've been seeing in Nigeria for the past 6 months. And with the exchange rate still being volatile due to shortages of arsenal for the CBN to find some sort of stability in the foreign exchange market, we expect that inflation will still trickle up, and we're expecting January data to come out about 16.5%. That is another upward spike, and we are not going to we don't see that stemming down anytime soon, because as well, food inflation has been a very big challenge. We know the food basket has been expanded drastically for the past 6 months, 7 months thereabout, not because of the threats we're experiencing in the food, just in the food basket of the nation, but as well the FX issue, which tends to roll back into terms of supply. We know the borders have been open, but that would not take away the pressure we've been seeing in the food basket and the food inflation overnight. So as well, because PMS, which leads to transport, I mean, which facilitates transport generally, the more we see those variables, we know the FGN kind of put a cap on the prices, but with oil and the global markets shooting up above $60 per barrel, we're expecting that there will be some adjustment anytime soon, and that adjustment will as well impact prices in the market. So price stability in Nigeria is going to be threatened for a larger part of the year, until the CBN can find a way to have a hold on foreign exchange, the FX market, to stabilize the exchange rate to a large extent. And as well, the PMS, if you're going to take out subsidy, let's take it out. If you're going to put it there, let's put it there. So there need to be decisive decisions taken. But using the monetary and fiscal, yes, the monetary might help, but liquidity is not really the challenge of our inflation at this moment. It plays its part, but it's not the bulk. So last year, we saw a whole lot of liquidity in the system, and inflation kept on trickling up, regardless of the fact that the CBN consistently debited banks, CRL, at a discretionary rate, but that did not help the inflation. So in as much as we can't curtail the threats, the unfavorable threats that we are seeing in the food basket of the nation, and as well the FX challenge, we'll keep seeing inflation spike.
Right. I think these are sort of the recommendations and suggestions that Ali Kansachi of Rich Frontiers Management in Nairobi actually gave on Monday as well. That if we need to devalue, just go devaluation, I mean, and get past all of those things. Let's put all of that behind us. Let me come back to you, Ali, with one or two other headlines that we have in the North African markets there before the end of the show. You have Egypt. You have that Egypt is launching a new tender for oil and gas bid round before the end of this month, and that is something to help them ramp up exploration in Egypt. I mean, how significant or what will that mean for the oil and gas space in that country?
Yes, just to have a small, we can say, history about gas in Egypt. You know, in 2015 in Egypt, Zohr field has been discovered by the operator Eni, so the Italian operator Eni. Eni said it was the largest ever gas discovery in the Mediterranean. So it, you know, this discovery, as we can say, pushed a lot of new measure in oil measure to invest and to be interested in natural gas and oil exploration in Egypt and its offshore seas. You know, we can say Eastern Mediterranean is really, really interesting in terms of gas. So you have a lot of new, we can say, investors coming to Egypt because Egypt was not, we can say, a big, we can say, player in gas and oil a few years ago. So a lot of, we can say, new investor has come to Egypt to explore and to try to drill. So I will give some name. So Eni, of course, BP, Total, ExxonMobil, and Chevron. So it's a lot of new, we can say, people investing in Egypt for gas and oil. So Egypt, you know, most recently signed 9 exploration agreements with 6 local and international oil companies in January, so so last month. So the contracts were worth more than $1 billion. So all this, we can say, new contracts, so they want to do the same in February. This is to attract as much as possible of foreign currency, you know, because the oil and gas just recently, we can say, increased. So it's really interesting to see that Egypt want to, we can say, to settle its place and to say, yes, they are now a new player in the oil and gas field.
Okay, and you've got a couple of other corporate stories from Morocco. Any idea as to how that will shape the companies?
Yeah, so for Morocco, it's quite, we can say, it's quite mitigated. You know, Egypt, we can say they are in a good track, you know, as they try to we can say, to attract foreign investment and all this kind of stuff. But for Morocco, it's totally different. You know, for Marsa Maroc, you know, it shows that we can say it's a drop in container traffic. So Marsa Maroc is, we can say, a port operator. So we have seen that for Marsa Maroc, they say, yes, they have a big drop. And this is a big issue for Morocco because especially in Tangier, the town of Tangier, they have a big port. And if this port is not, we can say, producing as it should be, it's a really bad news for Morocco. So this is we can say Morocco is not in a good shape for trade and all this kind of stuff.
That goes to say the COVID-19 pandemic also had some serious effects on the earnings of quite a number of these companies.
Yes, of course, you know, COVID-19, I think for Morocco, they are more exposed than any country in North Africa, you know, because they are exposed in one part for the remittances and other part for tourism and the last part for trade. So these three, we can say, these 3 parts are big, we can say, impacted by the COVID-19. And this is one of the reasons that Moody's just put the negative outlook, so from stable to negative outlook for Morocco just recently.
Thank you very much, Ali Segar of the professional services firm based in Dubai. Segar and Associates, appreciate your analysis and insights on these headlines this morning. Thanks a great deal for joining us on the program. Akitunde Suleiman, research analyst with Greenwich Merchant Bank. Thank you so much for your analysis as well. Thank you, gentlemen. Temple Ashajo, and this has been Frontier Opening Bell. I'll see you next time. Bye for now.